Welcome back, everyone. Native Day Trader here with an after action report. Today is Monday, November the 4th, and what we're looking at is a micro crude oil chart from the futures market. And this is a trade that I took today. It was profitable, and I want to run down the specifics of the trade so that if you were in it, maybe you could have made more money if you didn't already make some. Or if you missed it, these are the types of trades that you should be looking for so that you can make money. Let's get right into it. What you're looking at is a 15-minute chart. Every bar on this chart is 15 minutes of trading time. And I like to trade the open of every day. As you may or may not know, the futures market trades 23 hours a day, 5 days a week, and it gives for more opportunities than, let's say, the New York stock market. Let's get right into this. So, before the market opens for the new day, what I like to do is I like to draw what's known as the opening zone. So this here, right here, is your 20. That's the blue line. The red line is the 200. And obviously this red candle would be their low. So the opening zone is going to consist of a couple things. First, we're going to find where our 20 is. We're going to find our 200. We'll mark that there. And we're going to look for the previous low. I like to go maybe a half hour, at the most 45 minutes back to find what the lowest point was. The last closing candle of the day was right here. So we'll go ahead and denote that. So this right here is our opening zone. Again, it's the lowest price action point, the 20 moving average, and the 200. None of this has existed today. This is your opening zone. This is what you should be doing on all of your charts a couple minutes before whatever market you like to trade opens. You can do this for the US stock market. You can do this for the cryptocurrency market. You can do this for the Forex market. And as you can see, you can also do this for the commodities/futures market. After we establish what our opening zone is, it's vitally important to remember we must wait for price action to present itself. We are allowing the market to come to us. We're not just trading anything here. Specifically, anything in this zone right here inside the opening zone is to be avoided at all costs. There are no trades that are to be made in the opening zone. Is everyone listening to this? A lot of people get faked out. They get psyched out. They get punked because they trade in the opening zone. This opening zone right here is the zone of uncertainty. Anything can happen in this. The trap zone also resides somewhere in here as well, too, by the way. So, no matter what you want to call it, the opening zone right here is to be respected, and we wait for our moment to come. Now, if a bar, it doesn't have to be the first bar, it could be the second, third, fourth bar, whatever bar it might be, anything that pierces upward from this opening zone has a potential to be a long. Likewise, anything that appears below the opening zone has a potential to be a short. Does everyone understand that? We wait and we bide our time and we see what the market presents to us. If it's above, we go long. If it's below, we go short. But we just don't do that. We have to wait for what I like to call a matching bar. What's a matching bar? Green. You have green above the opening zone. Statistically, that's a good sign for a long. Likewise, if you have a red bar down here, a red candle in negative territory below the opening zone, Statistically, it's a short. And that is what we're primarily dealing with as traders. Again, it does not matter what market you trade. You want to think of yourself as a probability trader. What is the probability that I will get continuation from my candle off of or out of the opening zone? If it's green, depending where that green is, you can have anywhere between an 80 to 90% chance of follow through, of being right in either direction, up or down. So let's go over this trade one more time. Again, we have the opening zone right here. As you can see, I'll get rid of this right here. As you can see in the opening zone, we have something very interesting. We have the 20 and the 200 in relative close proximity. I mean, they're very close right here. Okay? As the day progressed, they got wider. But here, they're touching each other. They're right next to each other. This is what we want to look for. We want to look for the 20 and the 200 to be very, very close together. Because as they branch apart, so does price action. Does everyone see that? Does everyone see how once this branches from here and here, price moves here? It works in the opposite direction too, by the way. The problem is that most people are very impatient, or they simply just don't know what to look for. So that's a big tip, to wait for the 200 and the 20 MA to be relatively close to each other. So how do we play this? Well, first bar's here. Okay? You could have gotten this bar if you wanted to. I missed it. I had to do some other things. I didn't have a chance to get this bar, so I missed it. So what did I do? I waited. I waited until it retraced back here. And what I did is, once this bar, let me zoom in for you here. Once this bar right here emerged from the 20, I thought to myself, okay, that's what I'm looking for. The next candle actually opened red first, and then it went green. I was in right here. Bam! 2 lots. Okay? I was in for 2 lots. And then I said, you know what? I'm going to make sure I don't get stopped out on this. So, I like to have a 1 bar stop loss. I'll say that again. I like to have a 1 bar stop loss because for me, a 1 bar stop loss is like falling out of the basement window. Statistically, you're going to live. It might hurt a little bit, but you're going to live. On the flip side, not having a 1 bar stop loss could potentially be like falling off a skyscraper, a 15, 20, 30-story building, maybe even higher. And statistically, you're not going to survive that. Or on the off chance that you do survive it, your life will never be the same again. And if you're using your family's money or your money to do this, then the potential for a catastrophic loss is almost certain. So, what do I mean by that? Well, as I got in this bar right here, I put my stop one pip under there. Look at that. That's your stop. That's our risk. Okay? We're only risking a very small amount of capital. Again, I got in right there. Look at this risk unit. Look at this risk unit. And look what happens to the price. Price rips all the way up. This was overnight. Again, I'm on the West Coast, so these times down here are in Pacific Standard Time. They're not, if you're in, New York or in the middle of the United States or wherever you might be in the world, I'm Pacific Standard Time. As you can see, Not only does this thing rip all the way up here, but look what happens. It goes further. And so I closed the trade right there, as you saw. I closed my trade right there. Out for 2. Got in here. Got out here. I put my X on that bar right there. Out. And I made $325 off this trade. Not only did I make $325, but this is for this particular account was for my prop firm challenge. I wanted to see what I guess all the talk is about. Some people call it noise. I wanted to see exactly what being a prop firm funded person was like. So I said, you know what? I'll go ahead and do that. I might make a video on different types of prop firms here in the near future, but for now, let's break it down. $325.14. That was my total profit for today. From this trade, holding it overnight, and getting out in the afternoon. $325.14. I'm going to be reviewing other trades. I'm going to try and make this a daily thing because a lot of people are very, very interested in learning how to trade the market. They just simply do not know how to trade the market. There's a lot of people out there that you might come across that proclaim that they can teach you everything you want to know without ever making a losing trade. Whatever. You cannot avoid loss in this game. Let me say that again. You cannot avoid loss in this game. Losing is part of it. Just like winning is part of this, so is losing. For every winner, there has to be a loser. And for every loser, there's a winner. It's a zero-sum game, guys. This is how this works out. This is how this shakes out. I'm simply saying, and I'm not giving any financial advice by any means. I'm simply saying that there is a method, a way to put the odds in your favor so that statistically you can make better trades. Because at the end of the day, what if listening to me could take 85% of your winning or losing trades away? What if you could correct, avoid, replace 85% of your losing trades just by listening to me? What would that do for your bottom line? What would that do for your financial future? Your family's financial future? What would that do for you? Again, this is a chart of Micro Crude Oil, 15-minute chart, and this has been a review on how, if you would have traded today, this market, this is how you would have made money. So let me just do it one more time here, okay? Let's just do this one more time. Okay, here we go. One last time. Before the open, we create our opening zone. What does that mean? We take the bottom low, the bottom lowest point of the day, draw a line through infinity through there. We take the 20 MA right there, and then we take the 200. This time the 200 is above it, so this goes out into infinity. Okay? That's our opening zone. Anything in here is to be avoided. We do not make trades in the opening zone. Okay? Let price action come to you. You do not chase price action. It comes to you. Be patient. Sure enough, this time it happened to be the first bar. It's not always the first bar. Oftentimes it is. Sometimes it's not. Today, it was the first bar. I missed this bar. I had to do other stuff, so I missed it. By the time I noticed it, it was right here. I just waited patiently waited, patiently, until right here, a nice move off of the 20. This is textbook right here. This is a textbook position. A nice bull green candle right here. This little guy right there. Power. Right there. Strike. Bam. 2 lots. Stop. 1 bar below. I like falling out of the basement window. I don't like falling off skyscrapers. Right there. That's our stop. Right there. As the day moved on, I just let it ride. I actually just let it ride. Because this happened last night. This was an overnight trade. I went to bed. I woke up. It's profitable. Dipped a little bit. Went back up to profitable territory. And I got out right there. That's where I got out. There's my 2 lots. And I was done for the day. $325.14 off 2 lots. Right there. That's how you play this game, guys. Thank you for watching. I am Native Day Trader, and I'll be looking forward to you again on another after action report. Until then, keep trading.